What if I told you there is one metal that has so much future demand over the next decade that experts are warning even at best case scenario, we are going to be only able to meet 70% of what is required. And the best part, there are still some amazing opportunities that the market hasn't caught onto yet. Huge demand, short supply, cheap stock prices. This kind of recipe creates fortunes. We break it all down and give you our best hand-picked stocks with insight from our government-accredited share trading education, which has our experts regularly called upon by major media Australia-wide. I'm Dale Gillam, joined by senior analyst Janine Cox and Philip Tortevsky, and together we are Wealth Within. Good evening, team. How are we?
Good evening. Great to see you back again.
I was going to say, have you missed me?
Yes, of course we did.
You did? Phil didn't.
Look, I'm glad sitting on this side for a change.
No,
So
it's
it's
like,
all
yeah, it's
good.
like,
Yeah.
I get to sit over there and take it easy while Dale does all the hard work. Oh, well, according to Reuters, copper demand is expected to rise from 28 million tonnes today to 42 million tonnes by 2040, driven by AI data centres, electrification, defence spending and robotics. At the same time, the International Energy Agency warns that existing and planned mines may only satisfy around 70% of projected copper demand by 2035. Some forecasts suggest the world could face a copper shortfall of as much as 10 million tonnes annually by 2040 if new mines aren't developed quickly enough. So, tonight we're going to ask, could copper become the most important commodity of the next decade? And which ASX companies are best positioned to benefit? I'm going to go to Phil. What do you reckon, mate?
Look, the demand story says yes. And in terms of the companies, I think, right now it's a story of either producer or developer. I guess safe play is the producer.
Yeah.
The big reward opportunity are the developers, because they're obviously factoring in these sites on, assumed copper prices. We get an explosion in the copper price, that's where revaluations happen, that's where re-ratings happen, and that's where you can see really strong share price appreciation. And we've got a few of them tonight, so not going to give away too much.
All right, stay tuned for that one. What do you reckon, Janine?
Oh, look, I think watch out for takeovers as well. That's
Watch out for
the big
takeovers.
one. Yeah, especially with some of the smaller copper stocks.
She's always into those little theories, isn't she? Looking what's the takeover targets anyway. Well, what evidence are you seeing today that tells you whether copper or this copper shortage is real or just another market narrative? Now, I'm going to go back to you, Janine.
I guess the biggest evidence out there is that demand forecasts keep rising while the new mine discoveries are falling, creating a supply gap that the industry simply can't fill quickly enough. And that's the big challenge, isn't it?
Now, if copper prices continue higher, which type of ASX copper company stands to benefit the most? I'm going to ask you this one, Phil.
Yeah, I gave it away a second ago, but really it's the...
Oh, you didn't? You
it's the developers. They really have the big advantage in this scenario, and I think, our market is full of them, so there are going to be plenty of opportunities. We're going to dive into a few soon, but again, it's a producer and developer, know the risks of each one, and obviously the share price is going to tell us everything. So,
well, absolutely. Now, okay, stock time. I'm going to go straight to Janine because she loves stock time. So kick it off, Janine.
All right, let's have a look at the first one. Now, this is Firefly Metals. Just looking at the big picture, Developer Explorer, that's sort of giving it away a bit.
Yeah.
As to what the opportunities are, but also the volatility with these ones. But it just looks like it's setting up to push higher, and I'm really excited about this one. And in this case, often we might say just wait until it gets through some of this resistance, but I think, looking at it, it looks like it's actually gone through a lot of that historical resistance already and is finding support. So this looks really good for a setup to head towards that $4 mark and possibly beyond. So I do like it. Just watch. The only caveat I would put on this is if it falls below that low there in May 2026, then just give it a wide berth and wait a bit longer.
Well, just looking at the volume on that, like since the last quarter of last year, volume's really increased on that one. So I think it's looking pretty good. What do you reckon, mate?
Yeah, it's crazy. I mean, it's such an important point that you said, and I'll bring out the weekly a bit further to show exactly how much volume. And when we zoom it out from the all-time history of this stock, you can see that the dynamics have completely changed since January 2024. And the world's, obviously we do have that, the supply and demand scenario, but I think the world's catching on now that right now the amount of energy required to satisfy this new wave of AI, we're consistently getting updates to say we're not going to have enough. I mean, it requires more and more and more, and that's where you look at these stocks and you see the volume on the chart be the biggest it's been in history and rising as the stock is expanding. I think what this stock's doing right now is so positive from the point of view that we've seen a bit of a consolidation, and typically what we've seen in history is when it does have a stall that it falls away rather than go sideways, and now we're consolidating instead of pulling back, which is, I think it's setting up for the next run. So yeah, very interesting.
No, it does look like that, doesn't it? It's not like, remember, I was watching a documentary with Nikola Tesla saying he could send electricity through the air, but they've never figured out how he did that. But that would be nice, no copper. But hey.
Well, he somehow died before he could tell the world.
Well, he did, and some of his drawings got somehow disappeared. I'm not sure how that happened with, the people in the know.
Happens that way sometimes.
Anyway, let's get into another stock. You go for it, this one.
All right, next one.
Otherwise, we'll get conspiracy from Janine.
Now, this one's called Coda Minerals, another developer, and again, very similar price action to Firefly. Firefly's, I would say, a lot down the track in terms of liquidity. So this one's a little more illiquid, just something to bear in mind. And it's a good point to make, because if you're going to trade these stocks, I think zooming out big picture, looking on those monthly charts is going to be your friend, more so than trying to dive in and catch every penny on a 14-cent stock. But again, when I look at the volume for this one, it is picking up in 2025. That's a nice sign. It does look like it's turned the corner. I mean, if you look through the whole history, this is the first time from December 24 to July 26, this is the first time this stock's gone consistently up for over 2 years or a year and a half, ever. And so that means something, coming out of these big lows. We're basing higher. Right now, the test is where it's struggled is around that 20 cents. We've seen sellers come through. So I'd like to see it get through 20 cents. And if it does, this has got a really healthy chance to get up to that 30, 40 cent region.
Looks like it's going to start trending really nicely, doesn't it?
And that's what you want to see. Coming out of lows, it can get really erratic. And oftentimes when it's really erratic, that tells you that maybe the stock's not ready yet. But when we see a calm down in price, really clean price action, all things that, in certain things that we teach and that come to fruition, it's setting up really well.
Well, it does. I mean, just because, I got an email in the last week from somebody who was like that, who was just trying to get into the small cap stocks and trying to pick all these runs and not getting them, so they're starting to trend. And they bought my book, and they emailed me saying, after reading your book, now I'm actually getting better stocks, getting better money, better returns, and obviously at lower risk, and not spending as much time spinning their wheels in the mud, and then they actually know how to sell and got more confidence. So if you want to get a copy of this book, it's still free. You just got to pay the shipping. All you need to do is click on the link in the description below, but it'll teach you about how to buy, how to sell, what stocks you should be picking for the type of portfolio that you want, because this is where a lot of people get it wrong. They just start buying stocks thinking they're building a portfolio, but what's the purpose of your portfolio? What are you trying to achieve? And so having rules and strategies and processes around is the way to build sustainable success on the stock market. So click the link below, get your copy for free. It's just got to pay the shipping, as I said. But we've got another stock at the moment, haven't we, Janine? And I think this is the best one.
We do. This is HCH. So this is Hot Chili Limited. A lot of people have read about this, talked about it. Some people have been burned by it. Looking at it now, it looks really nice, the way that it's setting up at the moment. It had a few false starts. We can see there to try and test those lows. It's come up again a number of times. So that's 4 times testing that bottom. And at the moment, it looks like it's poised and ready to shoot out of the blocks again. So, I think it looks really nice.
How do we know it's not a false start?
Well, it's had a number of false starts already along the way, and just the number of times that it's hit that bottom is a pretty good indication, I think, as to where it's going. Plus, the angle of that trend is much nicer. It's not sort of like this completely vertical move and then all of a sudden it just dies. At the moment, we've seen the angle just getting steeper and then setting up for a nice breakout, which looks really good. So like the other one, we looked at important levels, which this is a very simplistic way of just putting something on there, but it's not far away from those levels. If you weren't in it now, if you hadn't got in earlier, then you might choose to wait until it breaks out of that and then test the top before it breaks up again. So it's really up to you, but I just like the angle of how that's unfolding at the moment. Looks good.
Does look really good to me. It looks like it is going to start to trend. You just said something about, a simplistic way of just putting the resistance level on it. I see the other day, somebody sent me an email going, oh, you guys, just do stuff like these people. And I went, no, we don't. Not even close. What you see on the show is like nothing compared to what we actually do in our head when we're looking at these stocks and what we actually put on our own charts. It's like, and people think we just do some horizontal lines and that's all we teach. No, not even close. Like literally, if you looked at the Janine and Phil's and my charts when we put analysis on it, there's a plethora of stuff on that really helps us narrow down when we're buying and when we're selling, more importantly, and how we're going to manage that stock. But anyway, anything you want to add before I move on?
No, I just think it's a really cool topic we're doing today because when you talk about the AI story, it's been the hot story.
It has.
But you look at price action, I think, moving forward over the next couple of years, investors need to be very careful dealing with these AI stocks that are looking vertical. And then obviously the next option which the markets have gone to is the semiconductors. Now you look at that chart and that looks very dangerous to me, extremely vertical. The next one off, down the list, we talk about the underlying commodities, and you look at these copper stocks, they haven't really taken off like some of the other areas of this whole agenda. So I think tonight's show, get your rulers out, get whatever you got to do on the charts and start digging because it's an interesting spot.
You know what I think is really ironic? It's like when AI come in and all the algorithms come in, it's made our market much more volatile. We're having bigger, faster moves up and swift, faster move down. And now we're talking about AI stocks as basically the market's doing that to itself, so to speak, if you know what I mean. Yeah. So they're going to be part of that. And that's what you're saying, I'm thinking, or if I'm reading between the lines, AI stocks will take off, but they'll also do the opposite if you're not good enough to pick them at the right time and get out of them at the right time.
Yeah. Oh, look, you have to go with history, right? I mean, we've seen it time and time again. Any market, the worst thing you could do is fall in love with the idea and say this is going to go up forever, because that's probably the time where things turn violently.
But it's different this time.
Oh yeah, that's exactly what. That's exactly when you need to run, when you hear that.
It's different anyway. Well, stick around because we have more amazing stocks coming up shortly. But now it's time for our trending topic of the week, and Janine's done a lot of research on this one. What is it, Janine?
Well, I'm not going to claim all the research here. Pedro definitely helped me out, and you did as well. Investing habits could cost young Australians a fortune. We will take a look at what more young Australians are investing in shortly. First, more and more young Australians say they are choosing to invest to build long-term wealth and financial independence, which is great. However, the problems faced are not just the struggle to buy their own home, which has been the focus of political campaigns. It's much broader. Many young Australians face significant risks for two reasons, which I'll share in a moment. Research by Vanguard indicates that young Australians under 45 are the fastest growing segment of investors on Vanguard Australia platform, investing in a range of products. Now, what drives this group? Well, top motivations to invest include a desire to achieve financial independence. 61% say striving for financial independence is a key driver. Another driver is long-term wealth creation. But the biggest barriers to investing are not ambition or money. They are a lack of confidence, lack of knowledge and education, and lack of accessibility. Before we get to the charts, more young Australians than other age groups invest in exchange-traded funds and cryptos. One is considered passive investing and the other high risk. Now, here's the problem. The barriers are actually the biggest risks, not just what they're investing in. Making it easy to access investments actually improves accessibility but fails to address the lack of confidence which comes from a lack of education and knowledge, which gives you the ability to manage your risk. So what are young people setting up for? Let's go to the charts.
That's really interesting what you just said then, because I think I was reading some research that baby boomers are the least likely to have ETFs, whereas young people are more likely to have them. And millennials are a big area of ETFs too. which is quite interesting. But I think the baby boomers are more likely to have copper wristbands for their arthritis.
Well, but before the GFC, baby boomers had stocks. So they invested in more stocks, individual stocks, direct shares, and they also invested in managed funds, different managed funds, right?
Yep.
And we all know what happened after that. Neither of them actually protected them in the decline. But young people are we're going to see the same thing happen all over again because they're being set up with a false sense of what the future will bring, and it doesn't work that way. You know, the big institutions knew that before the GFC. They used to say, oh, your investment will grow by X amount every year, and they had a linear line on a graph. And after the GFC, they weren't allowed to produce such a graph because they know that the markets move in cycles. And we're about to come to the peak of another big one in the next, could be next year, could be 2 years from now. But, this is what young people need to be thinking about, their risks more so than anything else right now.
Yeah, it is, and it is concerning because the changes to the GST and everything the government's brought in the budget is actually creating it worse for younger people. And the reason I say that is younger people they're struggling to save up to buy the house like they used to do in the 70s, 80s, 90s, etc. But now they're trying to build their wealth through stocks and ETFs and crypto, and they're all the stuff they want to tax more.
Well, the other side to it too is that they always tell young people about their super that, that it's the fees that kill that 1% to 2% that give them the extra growth.
Yeah.
But when they're investing in ETFs, if the ETFs perform less, and we have shown on the show before that they underperform some of the best stocks, then they're going to underperform anyway, what they could do if they were investing in some of those big banks and big miners.
Well, there's an article on a blog post on our website about ETFs. I've done podcasts on ETFs as well, and I've just written a script for a video on comparing ETFs versus shares. So hopefully that'll come out in the next month, but it'll just absolutely curl your toes and blow your socks off when you actually see that video when I do put it up here on YouTube. Do you have any charts or anything else you want to talk about?
Yeah, we do.
All right, I'll let you have it then.
Yeah, I think that podcast will help a lot of people. Okay, so this is what we've got. This is the Vanguard International Shares. Now, there's nothing against Vanguard. It's a great index. It's done well. However, we know that stocks and markets and whether it's an ETF or whatever, they're not going to go up forever. And young people have seen this sort of growth and will expect that they'll continue to get that sort of growth. So they're choosing things based on the past, which is limited because when did this start? It started in 2015. It shows you no history of what a decline is. Now, when we're teaching students how to trade, if you learnt how to trade just with a bull market, which is what this is, you don't know how to trade because you haven't been through any of the major declines to know how your psychology is going to perform and the following of good rules and adjustments that you'll need to make. So, this is all bull. It's not showing you what your experience could be when there's a decline. So if I showed you the All Ords, that's probably more of a representation in those major declines that we show on the show from time to time. But I want to go to Bitcoin as well because this is the other big area that young people have been investing in. And this is very cyclical. I think this shocked a lot of young people to see that sort of a fall, and I think it's about a 70 or 80% fall on these ETFs, and this one was around that order. And so this is what happens, but the timing of these things is so critical for young people. If you're investing, trying to save for a house, and you're thinking, I'm going to get into Bitcoin, I'll get into Vanguard ETF, put my money in that'll make me X amount and help me catch up. That's a great idea, great in principle, because a lot of people have put their money in the stock market thinking they're going to be able to build that nest egg to be able to buy a house. Great strategy, but the timing is going to be so critical, not just for the house purchase, but also for the ETF. They could end up with a double whammy in that they're buying at the top of the market in the property, but also at the top of the market with the ETF, and then suffer a decline on both of those at the same time. So that would be like the worst case scenario for you. But just looking at the Bitcoin, there were a lot of people who made a lot of money on paper here, and so far, we've seen a big decline. It could come back further. This could be the bottom. It's at a really nice level at the moment. It could take off from here. However, it could also do the same thing that it's done the past couple of times when it's fallen at 70 to 80%.
I think it's got further to go down.
So what does that mean? It just means simply that young people need to build the knowledge and educate themselves. That's going to be your best defence against any market correction or Bitcoin correction or Vanguard.
It's not about what you get into, it's what you get out of it where you make the money. And that's what a lot of people don't understand. And that's the biggest thing that we fix for people. We get so many people come to us and go, yeah, I can trade. I've been trading for 3, 4, 5, 6 years. I read one email this morning from somebody who's been, I've been trading for 7 or 8 years. Well, why aren't you making money?
Yeah.
And it's because they don't know how to sell. And it's not about hitting the red button. They know how to do the red button bit, but they just don't know when they should be selling and what's the right point. Because we're always, it's going to go back up, or it's going to go further, or it's going to go higher. Because like you were saying, with the ETF, it's going up at the moment, but hasn't had a big crash, that international ETF. So people are going, well, it'll just keep doing that. No, it doesn't. And we saw that type of argument in the GFC. I saw it in the 87 where the market was never going down. We saw that up into that 2000 and 1900 high of Bitcoin before it fell 70%. Everybody goes, no, Bitcoin's going to 100,000, then it was going to 200,000. Bitcoin's got further to fall. I think it'll wash out this month, but it could be into August, I think.
Yeah, we'll wait for this pullback. If we look at the chart again, we're waiting for this pullback to happen. That'll be a test of that low. Once we get that pullback, then we'll know what's going to happen. So we will update you at some point.
Yeah, we will anyway. Well, anyway, if you do want the skills to analyse stocks just like you're seeing tonight, visit our website, wealthwithin.com.au. But let's now get back into our topic and get back into some of those amazing stocks, Janine. And I'm going to ask both of you what your favourite stock is after these ones, okay?
All right.
So be ready.
And he's not going to let me pick two, I know.
No, go.
Okay, Arias Resources Limited, AIS. Now this one looks really nice also. I mean, just look at the volatility that we've seen more recently, and that is only this little move down here. So just keep that in mind in terms of the big picture setting for this particular stock. But, there is some significant resistance that's evolved around this level here, and I really think that once it gets through all that, probably the safer option would be to wait for that move above that level. There is potentially an entry before that for people who are, taking a bit more risk and wanting to get in a bit earlier, but, then there could be a decent pullback from that point. But, we know that 3 things can happen. The stock can go up, down or sideways, and we just have to be patient while we wait for that confirmation. But I think this looks really interesting from a big picture perspective, just a bit early for me.
A little bit early? Mm-hmm. Okay. All right, Phil, it's up to you now.
All right. Next is 29 Metals Limited. Now, this one, a little bit less history than Aries, but we're getting into the producers now. So you can, see a little bit of a difference in terms of the price action, a bit more stable compared to some of those explorers or developers. What's really interesting here, the way this market's unfolding right now, if it can break above 65 cents, it's going to do something from a technical lens that is very positive. So, and I think that's about as much as I can say on that sense. A lot of our students would know exactly what I'm talking about.
So what would you say to one of the people that you're mentoring if they came up to you with this stock?
Congratulations.
I'd say, tell me where it's going to, tell me how you're going to get involved with price, and answer all the things you can answer as a trader. Yep. And that's it. That's the best you can do. But first, you've got to start off by understanding the way this price is unfolding. And that's why it's getting really interesting now, because we've had 3 touches of 20 cents or 21 cents, and we're coming off a bit of a pullback now. But what's quite interesting is, again, the volume story. It's increasing dramatically on this more recent move. So if this market can now start to reverse, and let me just bring that up, start to reverse a bit higher and start breaking these highs above 43, 44 cents, I think it may be preparing itself for the next leg up. And caution is always nice to exude on these kinds of stocks. So assume the worst, a run up to 60 cents, which is quite bullish if you're someone who wants to get involved at these higher risk areas. But if you do, like Janine said earlier, want to wait for the safer opportunity, then a move above 60 cents, I would say, would be where this one could really get some serious legs and go for a massive run. So there are a few choices there.
That's cool. Hey, I'm going to ask you a question. Have either of you heard of micro trading?
Micro trading?
Micro trading. Not
I've heard
microwave.
of other micro things, but
Micro trading.
No.
Janine's looking at me blank. You're looking at me blank.
Something new that they've invented.
I've heard of micro contracts. Is that what you mean?
No,
Trading
micro
contracts?
trading. No, I got this lovely lady who's started our beginner course, our trading mentor course. And the first lesson, it's about what's your why, because I need to understand why you're wanting to do it so I can mentor you. Like what's your purpose of taking on the course, etc. And she said, I've been micro trading the last 12 months. And I'm like, you're going, what's micro trading? I've never heard of it before. So I had to keep asking questions and everything else. And today, this morning, and the reason why I bring up this morning, she wrote me, she redid all her why and her goals after I've been working with her for a little bit. And like she wore and Peace, amazing piece of her why and her motivation. But originally it was micro trading. And here's the next bit. She wants to retire and make all her income from trading in the next 6 months.
Oh, yeah,
Within
nice.
6 months. Okay, so you're both excited about that one too. So it's about having to manage that with her, and I was like, okay, no, that's not possible. Like, you know, from pretty much zero knowledge to go to trading, you know, using the stock market, and she didn't have much money, and she doesn't have much super. So I said, what I'm hearing is that you're in a rush to get yourself financial security because you'd lost a job and everything else. And she said, yeah. I said, so I don't want to give you false hope. It's not going to happen in 6 months.
Some of the guys that have come out of the course, though, they have done that in 6 months.
But out of our diploma course, not our beginners course, because whilst the stuff in the Trading Mentors is in the diploma course, it's taught at a high level, not as much depth, because it really is about, do I really want to start trading? Do I really want to, can I do this or not? And a lot of people do that course because it's easier, it's very self-paced, it's cheap, you know, for what it is, you know, and so they do that course to test themselves. So it's about interesting, but you know, I was thinking micro trading and I wanted to ask you guys whether you'd heard of it, and I'd never heard of it. And she mentioned it again in her email today, micro trading, and I went, no, and I just said to her, I disagree with how you're trading, because she told me, and I said, we'll fix that though, and that's what we're doing. But anyway, I've taken you off track. I've just taught you something, haven't I? So have you got another one, Janine?
The mind boggles.
Well, it does boggle. We get hit with a lot of stuff. As mentors, people bring up stuff, or they give us an acronym, or they go, have you heard of this, or you haven't heard of that? And then you Google it and you go, oh, that's just with a different name. Yeah. You know, how many times have you seen that? It's just a different name for something else, and some technical whiz-bang name. But anyway, doesn't make him a better trader, that's for sure. Okay, Janine, what have you got?
All right, we've got Sandfire next. Now, this one's been on a bit of a tear. I suppose this one looks like it's well ahead of any of the others. Could it keep going? I think at this point, I would probably just wait for a bit more consolidation on the price. It's actually had 2 tests of this recent low, which is positive, but it hasn't shot out of the blocks. It got a bit shy here around that $20 mark. So I think that, you know, from my perspective about where it's trading right now, I'm happy to leave this one at the moment. So as you can gather, this is not my preferred pick. It's probably risen about, from that high, more than 100% anyway from that high, if I can just grab it there, probably about 120 or close to that. So therefore, stocks that have risen that sort of order from these prior highs often have pullbacks, which is what it's done. Now's the real test to see whether it can go further. But I would sort of probably have that as, it's a nice big stock, probably not my top pick.
So which one would you pick?
I think the first one that I talked about initially, this one I really like. It's got a really nice established trend. It's still got plenty of room for upside. It's consolidating right now. I'd just be waiting for that one. I think that looks nice.
Phil?
Good choice, yeah. I'm going to have to second that. They all look interesting. And the Sandfire one, that's the biggest play on our market from copper. So if you want, I guess, more of a, even though they are quite volatile, if you want something a bit safer, try the Sandfire. That's probably the pick. But for me, the first one in terms of the way it's setting up.
So that's your pick of the bunch?
Yeah, Firefly.
Yeah, I was thinking that other one, that other small one, I can't remember the name of it. It was like the first one in the second bit.
Oh, yep. Aries, yeah.
Aries.
And that's...
I was thinking that, but I'm probably... Actually, you're more of a cowboy than me.
I am, yeah. Must be getting old.
I must be, yeah, must be getting older.
Oh, I thought you'd go for this.
Which one?
A 29M, just because of all those peaks there, and not yet, but, you know...
I did, but I think the AIS, I think Eris, it was, I think, right now are probably a little bit more of a more immediate, not necessarily today a buy, but a more closer term buy than this one that you've got on the screen.
Okay.
But I want to talk about this lady. You know the lady, I sent you an email yesterday, this lady that contacted me. Mm-hmm. I want to talk about it. And this is an amazing lady. She's I'm not sure whether she's finished our diploma course or she's about to finish it. She just contacted me out of the blue on my LinkedIn profile. Don't contact me on my LinkedIn profile. I've got too late. Sorry. And then she goes, I wanted to thank you because she'd been listening. She'd been divorced. Her mum, single mum, brought her from overseas, from a very bad situation overseas, etc., and had to grow up with no money and all sorts of stuff through her whole life. And she's been divorced, and she's got divorced, and she's got a child with her, and she's like, I need to learn how to do this and make some money. And she was looking around and she found our podcast amongst some others, and she resonated with what we talk about on our podcast. And she said, you guys gave me the confidence to believe that I could do this stuff. And she's done the course, and now her super, she's 4 or 5 times the return on her super than what she was getting from a managed super in her self-managed super. And she's like 52, she said. 50 something, yeah? You're nodding your head in agreement. That's not normal.
You don't say women's ages, even if you don't say their name.
Why not?
Because that's rude, isn't it?
Why not? She should be proud. Women are like wine, they get better with age. They get more beautiful, better and everything with age.
I'm not going to say a word.
Save.
Yeah.
What do you say?
So what's wrong with that?
Better watch it, your wife.
But it is. It's just an amazing story. Now, I said to her, I'm asking Janine to give her a call and have a chat with her because she said, and I wanted to say this because Janine's her hero.
I've booked her into my calendar.
Have
already.
you? So Janine's her hero. It wasn't you or me, mate.
That's all right.
So anyway, all right. So moving on. Now you've picked your thing. So shortly we're going to get into our hot stock tip. But first, let's answer your questions. Now, Rodney writes, I invested in Nanosonics at $3.69. My stop loss is $3. Good product, sound balance sheet with net cash position. No use, but the share crashed to $3.09, then bounced back to $3.24 the following day. My question is, were there some technical analysis that I'm missing? Analysts gave target of $4.30 to $5. What are the charts telling you? I'll go to you, Phil, on this one.
Yeah, this is such a good question or important question, because if we just go to the chart quickly, you'll see that it's hit his stop loss. And I find, this so often, especially people that are looking at stocks and buying the story, that it's got a good story, good cash flow position, analysts are rating it at higher, and yet if he's sold based on his stop loss, he's out of this trade now. He's lost money. And so it just speaks to how important, or the most importance needs to be placed on when you're buying. And,
yes.
There's been this whole talk about it's not important, but I think that's crap. Because he might be right on this decision overall over time, and he's not going to be in the trade to make money out of it, all because of his timing. And that's why I think, there are plenty of things on that chart that we can go and have a look at in terms of what you may have missed. And it just speaks to, if you're going to get involved with the stock market, having the thesis, having the story, it's all great, but being good at the when, to get in and out, and they're the things specifically we teach. You can go away with knowing the what, or just trade a stock based on the price action and be far more profitable. So just going back to that chart, having a look, just a simple technique, and I'm just picking out one of the, things that you could get from your book, Dale.
Well, technically, you shouldn't have bought it.
That's right. And I'm not even going to get into that, because I think the first thing he needs to do is...
Well, that's what one of his questions was, is technically something he missed. Well, there was nothing technically to get a buy there.
Yeah.
So he missed that.
Yeah.
So can I ask... Well, because he does say analysts gave a target of $4.30 to $5. So, and whilst he doesn't say it, and I find that a lot of people look at an analyst forecast saying, $4, $5, and it's $3, they're going, and then that creates that cognitive bias in them thinking, well, the analyst says that, so it's going to go there. I'll buy in now at $3 because I can make $1 to $2 on this stock. And yeah, he put his stop loss in, but has he taken his stop loss? We don't know that, but we found a lot of people don't do that, but hopefully he has. But you don't know where it's going to go, do you? But I think that false sense of reality that people get from the analyst saying it's going to go here, I don't give a crap how far it goes up. It's about getting the right entry point. And people say to me, what do you mean you don't care how far it goes? I'm making money, so why do I care how far it keeps going? I'm only going to care when it starts to turn around and start to go down, and then where's my exit from there? Just because whilst it's making money, it's making money. So don't think it's going to stop at $3 or $4 or $5 or $6.
Yeah.
Let it tell you to do that,
Yeah.
So,
and I think the big point on this chart is when you do analyse it, I mean, you're buying it as the stock's falling. Just a simple monitor of that move would have told you, hey, this stock's not ready to go up. And that's just one of many things that would have given you a bit of a signal. But yeah, I think the best thing you could do is if you're thinking about being serious about getting involved with the stock, especially stocks like Nanosonics, the volatile type plays in the market, understand now that there are two elements to trading and investing well, and maybe place a lot more importance on how you get in and out and interact with price as opposed to the story that you're buying. Because you might be right. Eventually, it might go to 450, but the reality is you're not going to be in the trade to profit from that. So,
how many stocks have seen that had good stories that kept falling?
Yeah, that's right. Could
lithium,
go to $2.
Lithium for years.
Okay.
Until recently, for years.
Yeah, for years lithium kept going down. So it's about, as I said, it's about getting it right. But anyway, Adam's email is next, and he's saying, can you please take a look at RML? Would have been nice if you'd given us a few more details around why you want us to look at it, whether you own it or don't. But anyway, I'm going to go to Janine and see if she can make sense of this stock. What do you reckon?
Yeah, just looking at it, it's come from being a super illiquid stock to changing and turning a corner. And I don't know what was the change. This was in 2025, so I can only figure it's got something to do with the Trump tariffs and all of that was going on at the time. And but there we go. We've had this first run up, really nice, and then a following one which is euphoric and false. Essentially, that's the sell-off after that showed. That was a bit of a false rally, and then back to all the way to test that low there. This is showing the nature of this stock, and let's just have a look at some of those percentages. And everybody wants to look at, well, how far did it go up? But let's just have a look at what it dropped in this really short space of time. So it fell around 70% in just a couple of months, probably by the look of that. And since then, it's been really struggling to get through this we're talking, not talking $1, which is, what I like, but
talking 9 cents.
We're talking 9 cents it's trying to get through here. I mean, this is just playing in water that's just really risky. And there's a gap on the chart down there. It's still possible that it could continue to fall. The volume's been dropping off as we're coming through here. That's another sign. And at the moment, it's just holding around 5 cents. Now, if this stock falls from that level, then it's good buy back to test this low here potentially. So it's really hanging in the balance, I think, right now. And, when people don't tell us what they're thinking, it often means that they might be holding it and hoping that the price is going to go up. If it goes through that high, it's pretty straightforward here with this one, then it's on its way. But, if it comes back down to these lows, I don't hold out a lot of hope for it, given how many times it's tested it. It's tested at one, probably even that one there, 2, 3, 4. I mean, isn't that enough to say, okay, time to go? But if it comes back there again and is looking threatening, it could just as easily continue to wander down to 3 cents.
It looks ugly, doesn't it? Looks really ugly.
Yeah, I mean, it will look beautiful if it goes through that high. And this is where it's, with these low liquidity stocks, it swings in the balance constantly. So you've got to watch it every day pretty much at this point.
Yeah, probably the thing that you said that I heard the most is most of the time people that when they say, can you look at this stock, and they don't give us details, is they own it. And generally they're losing money on it. So hopefully you're not losing money on it. Hopefully you've got a stop loss on it if you do own it. And hopefully you're not looking at buying it at the moment, because you could be in trouble. It's not really giving us a real strong signs that it's going to go up at the moment. But anyway, Jules is next, and they write, interested in your thoughts on XYZ. It is close to satisfying my rules on the weekly and looking to enter on the medium term. Trade with an initial target of approximately $127 and a stop loss at 15%. However, I am concerned regarding the monthly chart as it still looks rather choppy. So what do you answer this one, Phil?
All right, it's a good email because he's looking at some, looking at the monthly chart for the first thing and looking at the higher time frames. Potentially could be a student of ours, but what I find interesting about this stock is, I agree, right now it's one of those stocks that's in a defined range, and I don't hate these types of charts, to be honest, because really you have the boundaries of where this stock has been fluctuating between for a very long time. And when you look at things right now, it's just come off the lower end of that, which is around that $74 or even just a little bit higher, around that $84. And so logic says this could, if it stays in this band, go for a run up to 127. So I like the fact he's picked that as the target, not the all-time high or anything, too crazy. We are starting to see the stock bounce from that level, base higher. We're getting another base higher at a new level, pop through. I actually don't mind this, to be honest. Understanding that you are playing in a stock that is quite gappy, so this one's probably a bit more risk. But XYZ, I believe, is in the top 200.
These blocks. So it used to be square and all that.
Correct, yeah. And it's now breaking through that long-term momentum. So, you know what? Yeah, not bad, Jules. I like the idea. I like the target. And he said 15% stop. So if I just measure that stop out from where we are today, that's somewhere through there. Yep.
I think that's fair enough.
No problem. Why not?
Yeah, I think they've done really well. I like it.
Range-bound trade, a little bit higher risk coming off lows, but higher the risk, higher the return. There's structure there, so which is fine.
No, do you want to say anything, Janine?
No.
Oh, that's quick. Janine, stuck for words. But anyway, now's the time for our hot stock tip of the week. I'm going to go to you, Phil.
All right. So the hot stock tip this week is Challenger Exploration Limited. Now, this one came out with huge news today. The company has delivered its first ever gold pour from the Julian project, marking the company's transition from explorer to producer and generating its first ever operating cash flow. Now, the news is clearly positive as successful commissioning and stronger than expected recoveries significantly reduce project risk and strengthen the balance sheet. This is the sort of milestone that mining investors wait years for, and now the focus shifts from can they produce gold to how much profit can they make producing it. So let's get to the chart on this one, because it is a milestone. First time a company starts producing, starts adding to that balance sheet, a lot of things change in terms of what it can do with money coming through the door. We saw it with Zip. I mean, Zip, if you remember not long ago, Zip reported its first ever profitable quarter, and the share price was all the way down. And it's gone for a huge run. I mean, operationally, things change when companies turn the corner. And the way this is looking right now, I think the price action was telling us that it was waiting for something.
It looks nice, doesn't it?
Right? Yeah. It had a really nice bounce on that monthly chart, and indecision through here, the price was consolidating back around those levels where we found quite a bit of a green. So right now, we've seen buyers not too long ago in 2020 push price up to around that 30, 33, 34 cent level. And I don't see why with the added news today that we can't go back to those levels, especially if it starts to become really profitable. So I think there's a nice little marker there at about 30 odd cents where this one can go for a run. We've seen this month already be quite bullish. It's taken out the May lows, and we're in a beautiful uptrend all the way through. So
we're 2 days in the month.
Yeah.
Jeez, wow.
Yeah, we'll call it early. But we're in this really nice uptrend. As long as we hold it, I think we are set for a nice little uptick on the back of this news. But if we do start to break through this momentum, and I would use the May low as the marker, as long as it holds May, because right now we have a catalyst, right? And it's so good when you see that it's make or break. We have the catalyst. If it's a good piece of information, there's no reason why this stock should start falling.
I like it because it's so easy to look at. It's trends so well.
Beautifully, yeah.
Whereas, how many times do we see stocks get suggested to us and they're just like a dog's breakfast all over the place, and it's like, make your job easy.
Yeah.
Make a stock like this is so much better. I do like it at the moment.
Yeah.
Anything else you want to add to it?
It's in the gold space as well, which is quite interesting. Gold's had a bit of a funny time over the last couple of months, but when you look at what's happening with this one, the last bit I wanted to bring up is the volume.
Again.
Volume's ridiculously changed, which when you see stocks go through significant shifts, it just adds another big tick to say, okay, well, if the big end of town was likely to get involved, you'd want to see the volume, come in, and we're starting to see that. So
that's what that's telling me. The big end of town are slowly accumulating this. And that's the thing is, people buy yesterday's returns. They see the stock take off and then they jump into it. But there's early signs that the big end of town's probably accumulating this stock ready for that takeoff. So I think it's a great pick from you. Any comments from you, Janine, or are you going to still not just sit there and...
No, look, I mean, they're calling gold higher, so they're saying it's going to keep going up while all this turmoil's going on. So any of these gold stocks, and this is a bit small for me, obviously, but, I do like the setup as well.